everybody's allowed to invest however and wherever they want. And so a lot of people in recent years have thought, well, I want to make sure my money is making the world a better place, or at least not making it a worse place. And they start thinking, man, if I own the stocks of socially unacceptable companies, however that may be defined, maybe I'm contributing to making the world a worse place. And so there are investment vehicles that have sprung up to allow you to avoid investing in these bad companies. They might be hurting the environment, or they might be affecting people in a social way badly, or they might have bad corporate governance. These are often called ESG funds. The problem is that people have different views on what being socially responsible is. For example, you talk to somebody on the left side of the political spectrum, and they may think a gun manufacturer is the worst company in the world. You talk to somebody on the right side of the political spectrum, and they may see a gun manufacturer as promoting freedom throughout the world, and freedom from oppression, and equal rights and the Second Amendment and that sort of thing. And it turns out on every view out there, whether it's tobacco, whether it's booze, whether it's gambling, whether it's defense firms, whether it's gun or ammunition manufacturers, whatever it might be, there are some people that think it's good and some people that think it's bad. So as you look for these funds, these ESG funds or ETFs, you have to actually make sure they align with what you believe is socially responsible. They may or may not. If you actually look under the hood, you may find, well, I think it's fine to pull oil out of the ground, and they don't. Or, I may really like dolphins, and I can't believe they use plastics in their packaging, and they're in this ESG fund. So you actually have to look under the hood to make sure it's actually not investing in the companies you don't want to invest in. But I would submit it might not be worth the trouble. I mean, here's the truth. When you buy a share of stock on the market, not through an initial public offering, but on the market, you are not giving your money to this company. It's not going to the company. That only happens at the initial public offering. It is going to the person who owned it last. Okay, if I sell a share of this tobacco company and you buy it, the tobacco company doesn't get any money. Okay, I get the money having sold it, and you pay the money to me essentially via the stock market. Okay, so this, whether you own it or not, the company doesn't care. They don't care. Now, I guess if you're going to show up to all the meetings and vote and try to influence what direction the company goes, well, then maybe you can have some effect on it. But just owning the share, for crying out loud, you're doing nothing. Okay? If you want to change the world, this is not the way to change it. And if you're patting yourself on the back saying, I own an ESG fund instead of a total stock market index fund, and therefore I'm a good person, I think you're just kidding yourself. I think this is just virtue signaling. All right? So keep that in mind when you're looking at these ESG funds. Another thing to keep in mind with it, you may be giving up returns. Okay? These tend to be actively managed. They tend to have higher expense ratios than a typical index fund. They tend to be more tax inefficient. A lot of the data over the years has shown that you generally underperform the market. More recently, it's not looked as bad, but that's primarily due to the tech stock boom. A lot of these tech stocks get pretty good ESG ratings. And so the ESG funds tend to be full of these large growth techie firms. And so since they did well up until 2022, the more recent returns have looked pretty good. But I think that's just a function of that little tilt in the funds. I don't expect that to continue long term. In the long run, I expect them to underperform the index. Now, can you do more good in the world with more money, or more good in the world with less money? Now, you don't want to take that view to an extreme, but the truth is, I think I can probably do more good just buying an index fund and donating to the charitable causes that I care most about than I can trying to invest only in ESG funds and actually earning less money. If you really want to change what a firm's doing, you need to go boycott them. Go really try to change what the firm's doing. I don't think buying a mutual fund that excludes them is somehow going to give you additional leverage over them. So I think that's the approach you ought to take to these ESG funds, these socially acceptable investments. is mostly to avoid them. Recognize that they're a little bit of a fad, even though some rule changes is going to have a lot more of them in 401ks than we've seen in the past. But for the most part, I don't think this is a place for you to be spending a lot of your time and investing a lot of your money. If you really want to, you can. It's your money. But I think you should not feel guilty if you're just investing in straight index funds that buy all the stocks.
The hosts of The White Coat Investor are not licensed accountants, attorneys, or financial advisors. This podcast is for your entertainment and information only. It should not be considered professional or personalized financial advice. You should consult the appropriate professional for specific advice relating to your situation.